hands, I would propose that we would start, as we could tell the more admins first, and then.
Yeah, just setting something real quick. So give me half a minute and then we'll start shortly. All right. So thank you everybody who has joined so far. We've got quite an audience here today. So first of all, thank you everybody. So massive thank you to everybody who has taken the time today on a wonderful sunny day outside. So thank you guys for joining today for our blockchain event. So this event has been in collaboration with the Estonian and Finnish community. And I'm going to introduce myself. So I'm Hans Gärtner, and I'm the founder and organizer of Blockchain Tallinn. And we've been organizing blockchain events in Tallinn since early 2018. And we have a lot of the same values that were inspired originally by the Finnish blockchain meetups. Because I've been in the Finnish blockchain community also since 2015 or so. And I've participated and arranged many events in Helsinki as well. So I had experience being a co-organizer and co-founder for the Helsinki Bitcoin Embassy. So we had an actual physical place in the Helsinki company city center. It was like a wild time back in 2016. We were doing a bunch of events weekly, and we were doing OTC cash trading, and we had a lot of community efforts also. So that was sort of my origins. And of course, the Helsinki Ethereum meetups were also a massive inspiration for what we're doing in Tallinn. And I'm gonna quickly highlight some of the stuff that we've been up to in Tallinn already. So to kind of give you guys an idea, the origins of our Tallinn meetups are definitely, in-person, it's kind of live events. And of course, right now, during the COVID times, it's a little bit more difficult to arrange any kind of in-person events. So we're doing more online events, and that's kind of what prompted the collaboration with the Finnish community also. So today's event featuring Aave is basically a collaborative effort between the Estonian and Tallinn crypto community, as well as the Finnish and Helsinki crypto community. And Aave is the perfect project to feature because they actually have their origins from Finland. So the name Aave actually, it means ghost, and Aave is one of the leading DeFi projects that actually started from Finland, and now they've made their way to an entire global stage. So they're ranked 17th right now by market capitalization. So they've achieved some impressive stuff in the DeFi ecosystem. And I'm kind of showing the previous events that we've had here in Tallinn. So we've had many events where we've had 30 plus, 40 plus, or even as many as 70 plus people at some of these events. So always taking place at different venues. So whenever we have the opportunity again, to arrange live events, then we would be more than glad to invite all of you to join also once the COVID situation is, of course, alleviated. And until then, we'll be actively doing online events. So you're all welcome to join us on the meetup groups as well as on Eventbrite. And we've had even crazy venues like the Nature Museum and featuring some awesome cool projects also. So that's everything that I wanted to cover from my side. I'm going to hand the stage over to Markus Lehtonen, and he's going to introduce a little bit about what Blockchain Forum Finland is and a little bit about the Finnish side of the currently ongoing efforts. So Markus, the stage is yours.
So hope not losing you. That's
I can hear you.
I think you can hear me, yeah? So I share as well some not so fancy pictures, but I'll share like just from our web page a little bit the story. That's what's the story behind like these Finland activities. And yeah, so this Blockchain Forum Finland is a bit over 4 years old, and 2017 and 2018 we had a dream. So we had like a big event like this Blockchain Summit Helsinki. So there was like we had doubts to hire so big place. So there were myself and Stani Kulechov and 5 others, and we had kind of a 3-jump thing that we had first 10, then 100, and then 1,000 people together was the aim, and that we could hire the exhibition hall in Helsinki. So we succeeded and had like a lovely event there. They say it's like the slush that has started from Helsinki, that it was twice as big as slush in the first year and much more exciting and real event than slush. So we have the bar is very high where we aim with these things. We were in 2019 in the Finlandia Hall 2 days, and we got like widely the blockchain players there with us. And now we are just starting in a week's time the Helsinki Blockchain Center, and that's the new force coming from Finland. There are a few dependencies, but after those are sorted, we are already like in contractual relationships, for example, with the Dubai Blockchain Center, and so we will do amazing things together. But here, like this event and our working groups, like in this working group, Ethereum are like people from the starters of this Helsinki group here, from where practically all the Finnish big players have been in and then gone to various places in the world. And this group leader here is in the call, the Mikko Valjakka. And if Mikko wants to have a word, feel free. Then here is Mikko on the right. And my business associate partner, the Jay, he's the chairperson for the coming 2 years. And here, myself on the left as well. And in the middle, there's the co-founder, the Tomi Dahlberg, and the Teemu Rissanen down here. That we were the founders of this thing. And the only thing what I say still is just that you can join us. Welcome to the Blockchain Forum Finland. It's just this button here brings you in the Holbit shop, and our membership fee is 20 euros. So that's not bad to anyone. If you care, please do join. You get a lot of information from there. And that was kind of, if Mikko, you want to have a word, please feel free. I don't want to take any time from our presentation more. Thank you from my side.
Awesome. So thank you, Marcus. So I'm going to introduce David. So our guest speaker today is David Truong from Aave Protocol. He's a really experienced developer and he's been in the blockchain ecosystem since 2014. Over the years, he's worked with industry-leading startups, including Coinbase and others. And now he's become a recognized developer in the DeFi ecosystem. In the presentation, he'll be covering what are the inner working mechanisms for Aave Protocol, one of the industry-leading DeFi projects. What does it take to secure more than $5 billion worth of assets? And what is next in their sights with their Aave 2.0 version release and much, much more. So without further ado, the stage is yours, David.
Thanks for the introduction, Hans. Great presentations, both Hans and Marcus. So, yeah, as Hans mentioned, my name is David. I'm a developer, have various backgrounds in startups and been in the crypto space for a while. So in today's talk, I'll go over the basics or a general overview of Aave, but we can also keep it dynamic. So feel free to post your questions, and we'll have gather some questions at the end of the talk as well. But yeah, Hans, maybe you can manage the questions if you want. If there's any specific questions you think that should be answered in the moment, let me know.
Sure. So we have like a Q&A section allocated for later stage of the event. So that's currently the plan. Okay, perfect. Well, that works then. Let me just share my screen. You can see the screen now, right? The Aave presentation. Yep. Awesome. All right. So I'll get started. So yeah, as was mentioned, actually, Aave's the founder, Stani, is actually Finnish. Yeah, so Aave means ghost in Finnish. But the rest of the team is sort of international. So now we've grown to quite a few people. I think it's probably under 50 people now, and it's growing quite rapidly over the last few months. But for those that don't know, Aave is what we call a liquidity protocol. So what that means is, on one side, let's say on the left-hand side, we have depositors, and they interact directly with the smart contracts, the protocol, and they earn interest by depositing assets like Ether or DAI or wrap BTC. And on the other side, we have borrowers, and borrowers can also interact directly with the protocol, and they can take stable or variable interest rate loans, and these are instant loans that they can take. So it's quite different from a bank, where you have to go to the bank teller and you have to sign these forms, and maybe it takes a few weeks to months to get something done. This can happen immediately whenever you want, and you can withdraw your deposits whenever you want, and you can repay back your loans whenever you want. And besides the depositors and borrowers that are involved in the pools, we also have the price feeds, and the price feeds ensure that there's accurate pricing within the lending protocol or the liquidity protocol, and those price feeds come from Chainlink. At the moment, we have collateral liquidators. So to ensure the health of certain lending positions, liquidators, the third-party liquidators, are incentivized to essentially liquidate positions that are in danger, and they receive some incentives for that. And that's open to anyone to become a liquidator. And then of course we have more than 100+ integrated applications, and these are, whether it's protocols or dApps or just other products and services that are built on top of Aave, or they include Aave in some shape or form. And I'll go through some of them, some good examples later on. So a quick sort of state of the union, sort of an overview of Aave, where it's currently at. So as already mentioned, there's more than $5 billion total value locked. You can see here on that was March 22nd. Of course, today I think there's quite a bit of a dip across the board in crypto, but we're sort of hovering around 5 billion, and it's growing pretty fast and crazy, because we went to mainnet in early January 2020.
So since then, we've grown incredibly fast, more than 5 billion TVL. And then also recently, last week, or was it 2 weeks ago, we announced the AMM market. And that's already grown. That's another market besides the main Aave market, and that's already grown to $20 million rather quickly. And for those that don't quite understand the AMM market, what that is, it's the same sort of concept with, you have someone on one side depositing assets, but instead of depositing assets like Ethereum or wrap BTC or DAI, what they do is they provide liquidity to an AMM, like an automated market maker, like the Balancer protocol or the Uniswap protocol. And when they provide liquidity to those protocols, they receive LP tokens in return, which are liquidity provider tokens. And then now they can take those liquidity provider tokens and deposit them into Aave to use as collateral. And then they can, borrow stable coins of that or whatever else. So that ensures sort of more efficient use of capital, so that, people that provide liquidity to these AMMs, the capital is not just locked in these LP tokens. But yeah, so that was a new thing that was just released recently. But besides that, I'll go over the main protocol features, specifically in version 2. And they include, earning, which is depositing, borrowing, credit delegation, flash loans, and a lot of governance features that I'll go through. And currently we support, I think, more than like 20, 25 assets across the board, and more now due to the new AMM market. And yeah, we're adding, through governance, the protocol is adding new assets quite quickly these days. So I guess for those that are new to, let's say, DeFi or finance in general, I'll start each section explaining it rather simply in simple terms, and then I'll get more and more complex. So the way I do it is, it's ELI 5, which is explained like I'm 5 years old, and then the next one is ELI 15 and so forth. So it gets progressively more complex. But if I was explaining to a 5-year-old, you let other people borrow your money when you're not using it. If I was explaining to a 15-year-old, I'd say that you deposit your money and you can earn immediate interest on that amount, and you can withdraw at any time, like I mentioned before. And for more DeFi or crypto native people, what we actually do is we tokenize your deposit, and the protocol tokenizes your deposit and sends you back A tokens. And these A tokens are one-to-one pegged to the underlying. So if you send 100 DAI, if you deposit 100 DAI into the Aave protocol, you receive 100 A DAI in return. And the account holding those A tokens accrue interest immediately based on protocol parameters. So things like, or as soon as you receive those A tokens, you'll see the balance start ticking up, and that's essentially your interest just going up, earning it immediately. So that's pretty cool to see. And in sort of a diagram form, from the previous diagram, a depositor deposits something in an asset into the protocol, and they receive interest in return. Now, if it's explaining borrowing to a 5-year-old, so that's you borrow money whenever you need it. To a 15-year-old, I'd say that you borrow money, and depending on how much you've deposited in the system, that determines how much you can borrow. So we're an over-collateralized protocol, meaning that you need to have collateral in the protocol to be able to borrow, and you can pay it back at any time. And in DeFi terms, we use your A tokens that you've deposited as collateral to borrow any of the supported assets at either a stable or variable interest rate. So this is interesting because, so let's say for other lending protocols out there, it's mainly you just have a variable interest rate, which is essentially like a spot interest rate that changes depending on protocol parameters. The stable rate is, of course, more stable than the variable interest rate, but it allows you to essentially lock in a very stable interest rate. So it helps with planning. Let's say, so within a year you're going to earn this much in interest. So it opens up a lot of different and interesting use cases. A lot of people have started using stable interest rates these days because of yield farming and all that sort of stuff. So they can really know what profits they'll get in a certain time frame. And of course, in diagram form, you have the deposits into the protocol, and the same person can get an instant loan. So that's important there, that the depositor is the same person as the borrower in this case, because it's an over collateralized position. So next we have credit delegation, and this is all related to what I've already said so far. So hopefully I'm not losing people. But if I was to explain credit delegation to a 5-year-old, I'd say that you let other people borrow money. Explaining to a 15-year-old, I'd say that you deposit in Aave to earn the interest rate on Aave, but you can earn extra interest by managing your own loans to other people if you want to. So sort of like a B2B type deal. And for DeFi, in DeFi terms, you give other people access to your credit line by depositing funds into Aave, and you approve either one user or many different users to draw that credit line whenever they want. And the owed amount is essentially owed by you, but you can enforce that credit line off-chain if you wanted. So we have some use cases of B2B businesses enforcing the conditions and terms of that credit line through a legal agreement. You can also do that through smart contracts as well. So in diagram form, what that enables is that on one side you have depositors and they deposit into the protocol, but then the borrower is a different person. So in this sense, it allows uncollateralized borrowing from the borrower's perspective, because the borrower hasn't had to deposit anything into the protocol. And that's quite a powerful thing, especially in the current DeFi industry, because there's not many people or not many protocols that enable that. So we're seeing quite interesting use cases from this, essentially allowing other people to borrow your credit line because maybe you have no use for that credit line. And then going to flash loans. So we pioneered flash loans in early 2020. And if I was explaining flash loans, it's similar to credit delegation in a way, but I'll go into more detail. But if I'm explaining to a 5-year-old, it's free money that you have to pay back nearly immediately. And if I was explaining to, let's say, a Wall Street banker or traditional finance person, it's essentially an unsecured fixed term loan for about 14 to 15 seconds. So that's the block time on Ethereum with a very low fixed interest rate of 0.09% currently. And that's determined by governance. That the bank, let's say the bank in this case is the EVM or the Aave Protocol, that can always collect that expiry. So there's essentially no risk in that regard. And in DeFi terms, what it actually is, similar to credit delegation, it's an uncollateralized loan. However, the difference is that anyone can call the flash loan, and all they have to do is they just have to repay back the flash loan by the end of the transaction. And the reason why you'd want to do this is because between flash loaning and repaying the flash loan in that same transaction, you can execute any sort of code. So any sort of arbitrary code execution can happen. And there's a lot of useful use cases that you can execute there. If the loan's not repaid by the end of the transaction, then the transaction's reverted, and it's like the flash loan or the loan never happened. That's why it's no risk to the protocol. And I'll go through some examples, but this is in diagram form. This is sort of what a flash loan looks like, an example. The important thing here is that below the purple line, that's the arbitrary code execution that I mentioned. So in this case, they're doing some things with a CDP, liquidating the CDP and making some trades on a decentralized exchange, and then paying them back the flash loan debt. But the important thing is that above the purple line, that will definitely happen on chain. Everything below the purple line can be reverted if the loan's not repaid back by the end of the transaction. So that's quite powerful because you can do many different actions, and the only consequence you'll have is paying the associated gas fee for the things that are above the purple line, essentially. So some real world examples. This is something I created last year called collateral swap. So essentially, it's interacting with both MakerDAO and Aave flash loans and various assets, but you're essentially conducting 5-6 different transactions in one transaction using flash loans, and you're not capital constrained. So normally to do this, you'd need a certain amount of capital, and you do one transaction at a time. This allows you to do that transaction in one go without having to have that capital already, which can be very valuable. And of course, the other really obvious use case for flash loans is arbitrage. So traditionally, let's say arbitrage opportunities, for some players in the space, they're capital constrained, which means that for them, the arbitrage opportunity might only be valuable if you're doing millions of dollars transaction. But with flash loans, you can do that millions of dollars transaction and then make these arbitrage profits and then pay back the flash loan, but you didn't have to have the millions of dollars to begin with. So that's quite a useful thing in the space as well. And then specifically for version 2, we included what we call batch flash loans. So that enables you to flash loan multiple assets in the one transaction instead of just one asset. So that's like a brand new design space as well. And it's interesting seeing what developers are building using this new primitive. And so now I'll go through some governance things as well, which is another important part of V2 and how Aave has been evolving. So of course, for a 5-year-old, it means that it belongs to everyone. If I was explaining to a 15-year-old, anyone who owns the Aave token can help govern the protocol. So what this actually means is the Aave Protocol has a path towards decentralization, where the token holders are able to vote and govern the protocol. And this includes like nearly all the parameters from like asset listings, the protocol upgrades to, how does, what's the interest parameters or what's the risk parameters for this new asset that gets listed. And it's live now and it's happening now. And it's really cool to see. And this is an example of governance, decentralized governance in action. So Charlie from the Curve Finance team, he posted on the forums saying that, hey, please add CRV, the Curve DAO token, to Aave. And had the links and the explanations. Then Julian, who's also from the Curve team, he posted on Twitter saying that, hey, we want to make this proposal on chain. So like delegate your proposal power, because they didn't have enough Aave to submit the proposal. But the thing with the Aave token, the governance token, is that you can delegate both your voting power, but also your proposition power. So if someone doesn't have enough Aave to propose something, you can delegate to them to help them propose something on chain. So Julian, or this address, eventually got enough proposition power to submit that proposal on chain to list the Curve token, and then it got listed. And this screenshot was from quite a while ago, but at that time they had 8 million liquidity quite quickly. They have much more liquidity now. And this has happened for both like Balancer token and a few other tokens. And the governance process, if for those that are interested, it's still an improving and evolving process. But at the moment, it starts off chain, so it's like submitting what we call an ARC and an ARP that normally happens on the governance forums. The proposal is created, it's voted on, and then it's queued for execution. And this was a screenshot I took recently from the governance forums. You can see a bunch of different teams throughout DeFi and throughout the crypto ecosystem. They're trying to get their assets listed. And the important thing here is that it's all decentralized, and that the Aave holders ultimately have the decision power on what gets listed and when and how. And finally, the last part I'll go through is around staking, which is related to governance. So the other thing that is special with Aave or V2 and moving forward is that Aave has what we call a safety module. So effectively, that's like a protection fund for the protocol. So what can happen is that users, if they want to, they can stake their Aave token in the safety module. And if a certain event happens where funds are lost, then up to 30% of their stake can be slashed to, make to pay back, or to ensure that those funds are redeemed somehow. So it's been quite successful. That the safety module now has more than $1 billion staked, and not only that, there's also another staking mechanism related to balancer LP tokens, but that also has nearly $300 million. So there's like more than $1.3 billion staked in the safety module, helping to protect the protocol. And I think that's probably one of the largest in the industry at the moment, let's say protection funds. Right, and so the final part is some examples of what we call the Aavenger Fam, or just some teams that have built or integrated Aave in their product and services somehow. One of the top ones is DeFi Saver. So they were one of the first to integrate flash loans into their product, and essentially it's a one-stop shop for DeFi, and you can switch your positions from different lending protocols or different close your positions, repay your positions very easily, and they used a lot of flash loans under the hood. I mentioned before around flash loans, they're generally only useful for developers because you need to understand how to write code and do some sort of code execution. Combo were one of the first to do a what we call a WYSIWYG, or like a Lego block style flash loans, where a non-technical user can just grab these blocks and say, I want to flash loan this amount. Then once I receive that amount, do this over here and things like that, which is really useful because then non-technical users could take those arbitrage opportunities that would only really be open to developers who would code the smart contracts. So that's been really powerful. And then of course, Untitled Finance, for one of their early V1 vaults, they used the V1 credit delegation to essentially increase the yield that their A-Link vault could get by using credit delegation. So that was quite interesting. And Untitled Finance, they had a lot of integrations with Aave. I'm not sure with their version 2 how much, but for version 1, definitely there was a lot of integrations there. And then one of my favorites as well, Aave. They're essentially they've created a game that is provably rare interest-bearing NFTs. So the Aave, like these little guys here, essentially they're an NFT, but underlying the NFT is a bunch of A tokens. So as you play the game, those A tokens, as I said, they accrue interest. So your Aave has some inherent value, and it's increasing over time as you play the game. And I think that's a really cool use case. Yeah, and we have more than 100+ integrations in various other products and protocols. And here are some resources if you want to find out more. For developers, I'd say go to docs.aave.com. That's the most useful. And yeah, follow us on Twitter and Medium. I guess, Hans, that's all the sort of content I had, but happy to take questions and whatever else now.
Awesome. All right, thank you, David. Very insightful, and I really like the explain it like in 5 and explain it like in 15. Those are very good. So I guess let's get right into the questions, because I'm sure the audience has a fair few questions. So I'll start with the earlier ones first. So there was a question from Adila Hussein, and he says they're asking, how do you liquidate positions that are in danger? So how do you handle liquidations in Aave?
Yeah. So the important thing is that because we're a decentralized protocol, it's a permissionless protocol, so anyone can liquidate positions. We don't run any liquidators in-house, so it's all third-party liquidators. And essentially, when each position, let's say when you take a borrow, when you make a borrow on the Aave protocol, you have what's called a health factor, and certain assets, depending on your collateral value and what you borrowed, your health factor can approach 1, the number 1. And if it's below the number 1, that means it can be liquidated. So there's a dynamic between making sure that you don't borrow too much, but also making sure that you have enough collateral in the system. But when it's below 1, and then anyone can essentially call a function on the contract which liquidates it, they have to essentially pay back your loan. But they get a sort of a certain percentage. Sometimes it's between 5 to 10%, depending on the asset. But liquidators can make quite a bit of money, and it's super competitive because there are a lot of liquidators out there trying to do that. But that's how it happens. it's a bit like Bitcoin mining or blockchain mining in a way where everyone's being selfish, everyone's just trying to make their own money, but it helps the protocol ensure its safety.
So the liquidators are essentially acting in their own like selfish gain purposes.
Yeah, exactly. It's like a very like game theory type thing where everyone's just behaving on their own, but it works and it helps everyone.
That's true. That makes a lot of sense. So just like with Bitcoin, we kind of adopt the game theory model. That's a good approach. I like that. So Oleg was commenting earlier that he used Aave to take a stablecoin loan with AMM LP tokens as a collateral, and then he was able to put his money to work twice, basically. So on Uniswap and somewhere else. So
yeah, exactly. That's awesome. Yeah, and that's sort of what we want. I think there's a lot of space for making capital much more efficient, and that's a good example of it.
So another question from Mariana. So she's asking, are these flash loans trying to mirror traditional financial liquidity patterns, but with classical smart contracts then?
So there's no real world analogy to flash loans. So flash loans are very specific to blockchains, smart contracts, just because of the sort of no risk, sort of one block transaction nature of them. So they're not really mirroring anything. It was just like a primitive that was possible with smart contracts, and then it was created.
So then term like flash loans, it's just like a catchy name, basically. It doesn't have like an analogy.
Yeah, exactly. It was I mean, we called it flash loans. I think other people called it different, but now sort of the industry is just settled on flash loans. It just means one block loans.
Makes sense. And in the real world, of course, you don't have the ability to just reverse if the transaction doesn't go through, essentially.
Yeah, exactly. It's like saying like you can go to your bank and then you can tell your bank, hey, I don't have anything with me, but give me $1 million. And before I walk out the door, I'll give you back the $1 million. That's sort of what a flash loan is. It doesn't make sense in the real world because the bank would be like, why would we do that? But yeah, that's sort of the best real world sort of explanation I can give.
That would be awesome if it was possible.
Yeah.
I guess that kind of illustrates like why the DeFi ecosystem is so crazy right now. There's a lot of this awesome stuff that you can do with it. So let's take another question from Mikko. So he's asking about Ethereum 2 and how Ethereum 2 stakes could interact as possibly being able to use as Aave assets, or so could you like describe a little bit about how Ethereum 2 would interact with Aave overall?
Yeah, sure. I mean, so Ethereum 2, that's the underlying protocol. It's a whole separate thing, separate giant in its own right. But I do know that some teams, I forgot what they're called, I think Lido or something like that. So there's separate teams and projects. They've created ways where they tokenize ETH 2.0 stakes. So then when they tokenize it, it means that it becomes its own like ERC20 asset. So hopefully one day we'll have those tokenized Ethereum 2 stakes being able to be used as collateral or something in Aave. But of course, like I mentioned, this sort of stuff is really up to governance. I think the Lido team did propose something on the governance forums, but I think the details are still being worked through. But I think stuff like that is definitely possible in the future. But it's really up to those projects and teams to get the details together. There's quite a bit of inherent complexity in those things.
But so ultimately, if it's like a tradable asset, then it's quite likely that Aave would also incorporate it.
I'm just trying to find the right wording. So essentially anything that can be tokenized and that has a reliable price feed could be used in the Aave protocol if governance votes it in. Because you need the price feed to ensure that, let's say if you're using it as collateral, and the price of that collateral drops, you need to be able to know, okay, that's a dangerous position to be in, it should be liquidated. And you need tokenization because it, yeah, for obvious reasons.
Right, that makes sense. So speaking of governance, we have another question from Gaurav, and they're asking if there is any plans to expand the utility of Aave tokens beyond governance.
I mean, but so besides governance, there's the staking that I mentioned. So that's quite a utility that a lot of people use. As I mentioned, like more than 1.3 billion staked. Not that I know of, but once again, it's because we're like decentralized protocol, like anyone can really make suggestions on the governance forum. I think some people have like tried to, you know, push certain suggestions on the forums from the community. I forgot exactly what their suggestions were, but some of them are quite interesting, you know. So yeah, maybe I'm sure like in the future, as you know, the governance evolves and whatever else, the governance is good because it allows the community to upgrade the token essentially. So you know, if you want some sort of utility, you know, you can suggest that, and then if the community agrees, you know, it could be implemented.
Right. And since there are a few people right here in the audience who might be a little bit newer to Aave Protocol, could you quickly outline what kind of governance voting thresholds you currently have?
It's a good question. I'm not sure exactly on the details, but the special thing about the Aave governance is that we have what we call long time lock and short time lock contracts. So what that means is that for certain upgrades to the protocol that could be contentious, they have higher thresholds across the board, and for other, let's say for asset listings that you know may not pose any sort of danger to the protocol or less of a danger, and then the thresholds are lower. So it also depends on, you know, what you're proposing, you know, what changes, what upgrades, and things like that.
That's a good approach. That makes sense. So the next question we have from Akku, and he's asking, how does Uniswap version 3 affect the Aave automated matchmaker or automated market maker?
Yeah, so that's a good question. At the moment, I'm not sure. I know the core devs have been looking pretty closely into like the, you know, Uniswap V3 details. I think it definitely affects like us and you know, other lending protocols as well, like MakerDAO. It makes things a bit harder when the LP tokens aren't so let's say fungible, because you know Uniswap is turning them into sort of NFT LP tokens, but it just makes it adds complexity. But yeah, that's sort of something to be discussed and worked out. But yeah, I'm not aware of the stage of those conversations.
Sure, fair enough. And the version 3 of Uniswap, like that's a pretty like, you know, new development right now anyway, so it's hard to say.
Yeah, exactly. It was just like yesterday or something. I don't know. I haven't had time to read the white paper yet.
Right. So another question we have from Matthew, and he's asking, how profitable are flash loans these days with such high gas fees? And also, which flash loan platforms use a layer 2 scaling solution?
So the flash loans, because they're like programmatic and they can fail essentially whenever you want them to fail. Flash loans can be as profitable as you want them to be, as long as you find that opportunity. Because flash loans, you're not capital constrained. So if you're doing a flash loan for profit reasons, like an arbitrage, then you wouldn't go for like the $2 arbitrages. You go for like the $2 million, $200 million arbitrages, because then that's where you could make profit. Then in those cases, gas fees don't matter that much, right? Even if you pay a few $1,000s in gas fees. And that's usually why you see some people sending transactions for thousands of dollars, paying transaction fees, because the profit is just so huge. So yeah, they can be profitable, but it's super competitive. Like there's some pretty hardcore teams out there doing these things, super advanced, working directly with the miners and all these controversial things. And then for the second question, which flash loans platforms? So as far as I know, like not really any anyone is on L2 just yet. I mean, the L2 stuff is just starting to happen. Synthetics is one of the first. I think the IDX there on Starkware. We haven't announced any of our plans yet for L2, but that should be happening pretty soon. We should be hearing about our plans soon.
And how do you overall feel about the layer 2 developments in Ethereum ecosystem? Do you feel that it's at the promising stage right now, or what's your personal take on it so far?
Yeah, I think it's definitely promising. I think there's a lot of smart people really focused on solving this, and I think it will or is being solved. I played around with some L2 stuff, and when I played around with it and used it, it was quite magical. So I'm quite excited to see more of it coming online and more people using it.
Fair enough. So the next question is from Alexander, and he's asking, what does Aave charge in average per data entry, and what volumes of transactions run on the respective applications? So I guess that kind of relates to the transaction fees again.
I'm not sure. I mean, so we don't really have fees. The protocol has each asset has a I forgot what it's called, but a certain, I guess you could call it a fee, but it's more comes out of the interest that's paid, right? So, and then that goes into a protocol fund, let's say a treasury or a protocol fund, but that protocol fund doesn't go to Aave or the Aave shareholders, or there's no Aave entity that gets that. That goes to the protocol, and then governance decides what happens to those funds. So right now, I think so far it's collected probably more than probably $1 million or so, and I think there's discussions on the forums to think about what to do with those fees collected. So yeah, hopefully that answers that question.
So should that become a revenue source for the Aave project in future, or what's the idea behind it?
I mean, so it it's up to the governance, right? So it depends. On the forums, some people are saying to use that to buy back Aave tokens, or to just distribute it to Aave token holders, or things like that. So I think ultimately it would benefit the Aave token holders, but it could also be other it really depends, because benefiting the Aave token holders can be directly or indirectly. So directly is just paying out the profits to the Aave token holders. Indirectly would be helping to grow the ecosystem, helping to grow TVL, helping to grow integrations and things like that.
Yeah, makes sense. That's a good approach. So you can go either way. So the next question is from Marek, and he's asking, do you have plans to connect to traditional lending platforms who require their investors to be AML KYC compliant, but would like to have access to DeFi investors, and how you plan to solve it? It was whispered to me, so you can say the chat.
Yep. Yeah, I think it's a good question. We do have an institutions team, and they're working with some institutions, but also working with custodians who work with institutions. So there is chatter and talk and plans around that side, but nothing really to announce at this moment. I think we've already posted some announcements of some integrations with some institutional custodians, and that we're just going to get deeper and deeper into those integrations. Yeah, because as this person mentioned, there's AML KYC type things to consider, so it's a bit more complex than, let's say, traditional or normal DeFi type things. There's a lot more details to be worked out.
But so in theory, it would be something that Aave could feature.
Yeah, I mean, yeah. So I think we've mentioned it previously in I don't know, blog posts or talks as well, that we do have with our general the Aave Protocol strategy has always been a multi-market approach. So similar to the AMM market, there are plans to have many more markets, right? And it might be a high risk market, a low risk market, a stablecoin market, things like that. But also there's been talk of having let's call it a whitelisted market, or a market that is sort of KYC'd. And that would be an institutional type market. but yeah, those are sort of ideas that I think we've talked about previously. Those are still getting worked on.
Right, makes sense. Yeah, because a lot of these institutional developments, they of course take a lot of time, a lot of effort, and a lot goes into it. So of course we'll have to just keep an eye on it. Just listen to what you guys are about to announce whenever you're ready. So that's understandable. All right. So the next question we have from Michael, and he's asking about the flash loans. Would you be able to elaborate on what happens when reverting the blockchain? So what happens when you revert the transaction if the borrower doesn't pay back the flash loan on Aave? And if that happens, what would be the default cost for the borrower?
So it requires some, I guess, some sort of basic like Ethereum knowledge or usage. So essentially, if you've ever sent a transaction on Ethereum and it failed for some reason, that's essentially what will happen. Right? It fails, but then it's like it never got sent, but you still pay the gas costs, like you pay the transaction fee. But if you tried to make a swap on Uniswap, but it didn't work for some reason, it still costs you like a few dollars, but the swap that you were attempting didn't work. So the same thing with flash loans, in that there's no real like penalty for the borrower. It's just that they pay the gas fee, and that gas fee goes like to the miners. It doesn't go to Aave. Aave doesn't charge any fail transaction.
Yeah, fair enough. Makes sense. And of course, the gas fees, they might be a few dollars, they might be a little bit more. Depends on
exactly. Especially in these days, things can get expensive.
It's true. It's true. All right. So Oleg wants to ask about the future development of Aave. If you are able to share any insights about what's in store for the future for the project.
Oh, sorry. It was not my question. I wanted to ask a more question because Matthew already mentioned high gas fees.
Sure.
And you hinted at layer 2 version of Aave coming up in the future, David. So I was wondering specifically, what layer 2 solution are you considering? Whether it can be Matic or Optimism or something else?
Yep. Yeah, I mean that's a good question. I think internally, so externally we haven't like made any specific announcements. We have like experimented. We've had conversations with like nearly all the L2 and sidechain sort of providers. So I'm not sure how much I can say on this particular topic. But let's say that we've experimented with quite a few of them. And the thing about, I guess, DeFi in general, I mean, especially lending protocols, is that lending protocols, you have to think about interest rates, you have to think about collateral, you have to think about how much actual funds are locked in lending protocols. That's what makes them useful, right? So essentially the Aave protocol becomes useful wherever there's more liquidity. So that's, I think we're probably taking a bit of a slower approach than teams like, let's say, Synthetics, right, who can just jump in and they sort of create the market there. For a lending protocol, we sort of, it can be a bit of wait and see, but also it can be a bit of see what gains more traction, I guess. But we should have some news on some sort of early, let's say, experiments, L2 experiments soon.
All right, awesome. So hopefully, so the next question would be from Juan. So Juan is asking, given all the projects available in DeFi nowadays, what would you say is the key differentiator that Aave provides and others don't?
So it depends like what you're comparing to. If you're comparing to like other lending protocols specifically, we have flash loans, we have the stable interest rate. A tokens work quite differently from others in the space in their one-to-one pegged. We have tokenized debt, we have credit delegation. There's a whole staking safety module. We have one of probably the biggest, let's call it protection fund of any protocol out there. So if something were to happen, to the protocol and funds were lost or some event like that happened, most likely, the funds would be, recovered or people would be made whole in those cases. So there's quite a lot of differences. And then just in general to other DeFi projects, I mean, like you said at the start of the talk, we've been one of the top performing or top like highly used DeFi protocols out there. And I think there's reasons for that, just because, whether it's the UX or, the integrations we've had or, favorable interest rates, as a lending protocol, we can get a bit better interest rates in general. And part of that is due to the flash loan volume, since there's, that 0.09% flash loan fee that gets paid out to the depositors. I think we have more assets than a lot of other protocols as well.
Makes sense. So could you actually elaborate a little bit more on like the safety fund? So how is it funded, and is there like a certain amount that is like, gathered so far? How much might it be, for example?
Yeah, so the safety fund, or the we call it the safety module, and that's a protection fund so that I mentioned before. So that when users stake Aave, they're staking it in the safety module, and they earn a certain amount of interest, quite high interest actually. But in return for earning that high interest, they are helping to protect the protocol. So up to 30% of what they stake can be used to protect the protocol if a future event happens. So as I mentioned before, there's like more than $1.3 billion worth of assets protecting the fund. So that's how it's funded. Like people that stake into the staking module, they do that off their own accord, and they make their own calculations based on risk and return and all those sort of things.
So in a way, it's almost like an insurance pool. The people commit in their money, their tokens, and if a certain event does happen, then it's taken out of this, like insurance pool essentially.
We prefer to use the term protection fund. So it's it's more of it helps protect the protocol from certain events that could happen. And it's like pretty clear risk to the people that deposit, like that stake their assets, because they can be slashed 30%. But it's not just like randomly slashed. They're not punished. It's like that up to 30% can be sold on the market. And the proceeds of those funds are used to fix whatever happened in the protocol if something happened.
Right. So it's still in the interest of the Aave token holders. Yeah,
exactly. It's fully like, it doesn't go to anyone's pocket. It's like strictly to protect the protocol. Like to help. I think that's another thing why TVL and the funds in the protocol have grown quite significantly since the announcement of the safety module. Just because that provides quite a lot of good, it helps de-risk a lot of things for some people that want to deposit into these protocols.
Right, that makes sense. So we can take a few questions more. There was also a comment a little bit earlier from Petri. So Petri was commenting that flash loans actually have a counterpart in the real world, central bank money that banks can borrow overnight without collateral. It's not exactly the same, but pretty close. What's your thoughts on that?
Yeah, it's probably legitimate. I don't know exactly about those details, but it sounds like central banks just printing more money, just doing magical things. I guess the only difference here is that flash loans is for anyone. It's not just central banks. So the great thing that I've loved about flash loans is you can have like some 12-year-old in a basement, flash loaning hundreds of millions of dollars, and it's the same like access to funds as someone working at Morgan Stanley on Wall Street. It's just like how good is your coding brain, or how good are you finding opportunities? So that's the sort of, I guess, the democratizing aspect of flash loans.
Sure. So one of the things I'd like to ask is, as a developer, what are your main challenges that you're working on right now, and what's kind of in your sights that you're currently working towards?
In regards to the Aave protocol?
Yeah, for Aave specifically.
I mean, so the Aave team, we're relatively relatively small. compared to the size of the protocol. So I guess one of the things in the Aave team, the dev team, is people wear many hats and people work on many different things all the time, all at the same time. So yeah, there's tons of different things happening all the time. A lot of the stuff that I work on is more in the integrations or developer community side. So that includes, with other protocols, or like we talk about institutions or things like that, they want to integrate or use Aave in some way. So, building the tooling or helping them do that, enable that. That's more of sort of things that I'm working on these days.
Yeah, that makes sense. So we can take, if there's some more questions in the chat, let me see. I think we asked pretty much everything that we kind of wanted to. So there's one question about Aave as an employer. So Roman is asking, how is Aave as a company? He's curious, how they operate and how they are as an employer.
So there is like an Aave entity, and that Aave entity, has, I don't know the exact details, but let's say from my own experience, that there's some contractual agreement. But the main thing is that it's the entity that hires myself and these other developers is separate from the protocol. So the protocol are a bunch of smart contracts on the Ethereum blockchain, and they sort of run autonomously, and people interact with them whenever they want. The Aave entity is like another separate thing. So that's something to be quite aware of, I guess. But as a company, I'm not sure that so that question is quite broad, so I'm not sure how to answer that.
All right. And we have another question from Michael. So he has a follow-up to his previous question. What if the flash loan is staked on another platform? Is there a risk to reverting process on that blockchain?
No, not quite, because the way blockchains work is that they're a chain of blocks, and within those blocks, it's a chain of, well, on Ethereum specifically, it's essentially a chain of transactions in each of those blocks. So if one of the transactions early on in that chain fail, then that chain sort of breaks, and then it's like you never staked it in that other protocol. So essentially, if you take a flash loan and use it to stake in some other protocol, and then the flash loan, like, you don't pay back that flash loan, then it's like everything gets reverted, and it's like nothing was ever staked in that other protocol.
Yeah, that's a fair response. So as the last question for today, I'd like to ask you, what is your personal vision for the upcoming 10 years up ahead for the cryptocurrency ecosystem? What are some of the big trends and big stuff that you kind of either hope to see, or you're already feeling that, okay, this really could be like the next big wave? So what's your kind of feelings, hopes, and dreams for that ecosystem in the next 10 years? To me, it's not like a positive note,
A very big question. It's a good question though. I mean, I think, I've always thought, like, since many years ago, that eventually we'll start to see, let's say, cryptocurrencies or tokens, like the world to become tokenized, and we're starting to see that with NFTs. And people are starting to understand, like, NFTs or tokenized digital collectibles, right? And I see more of that sort of stuff happening in the real world, where it becomes more and more normal, to the point that people don't realize that they're interacting with cryptocurrencies or crypto. And the example I like to use is, it's like with the internet or with technology, like nearly everyone has like a phone in their pocket, but not many people realize that, as they walk around their house or walk around the city, there's millions, billions of packets of data that are being sent back and forth from your phone to some cell tower and then hopping around the internet to servers and whatever else. So I think in the future, that's what I feel like the future will look like in regards to crypto. And that as you walk down the street, you know, there will be all these transactions happening that you won't tolls on the road automatically, or you know, having your electric car charged by the road chargers automatically, and it's sort of just being streamed out of your wallet. I think certain things like that, and it becomes normal. I think that sort of stuff is what I see in the future.
So sort of like smart contracts become like an everyday thing. So just like everything could be like automated, and the IoT stuff could be like streamlined. So that's kind of like smart city ecosystem is kind of what you imagine.
Yeah, exactly. Like a smart city type thing. But you know, we wouldn't call it smart cities. We just call it a city. Like it'd just be like the way, you know, things work. It's like a fridge, right? A fridge like seems pretty dumb, but you know, 100 years ago that was like groundbreaking technology. Like you could store stuff for weeks, right? So something like that, where you know, I think our great grandchildren will just look at things and be like, that's totally normal, but it'll be like mind bending for us. So I think that would be the future.
Yeah, true. And kind of in the way that you said, you know, instead of smart city, we might call it just a city. I think maybe in 10 years, we might, instead of decentralized finance, we might just say finance.
Yeah, exactly. And that's a hope and dream, right? Where it just becomes normal finance. Yeah.
We just gotta, you know, build it up and make it happen. That's on us now.
Yeah, exactly.
All right, David, it's been super awesome. It's been a pleasure listening to you talk about, you know, decentralized finance, all that, and you've been able to handle all of the questions really tactfully also. So it's been wonderful hearing it from you. Great insight. We appreciate it very much. I'd like to thank all of the attendees that have joined us here today. The event recording will likely be published. I have to coordinate everything with the Aave team, and it might be available soon. And I'd like to thank everybody from both the Tallinn community, the Helsinki community, as well as if you tuned in from anywhere else in the world, you're also welcome, because we're doing online events right now, so you know, anybody could join. And we're going to be having our next online event in April. The details aren't finalized quite yet, but I'm going to create the event pages on Meetup shortly, so feel free to just sign up. I assure you it'll be something very cool. So just, you know, just stay tuned, just join for the next ones. And thank you again, David. Thank you again for everybody joining. And I wish you all a wonderful evening and a great weekend up ahead also.
Thank you. Thanks for having me, everyone.
Thank you on behalf of Blockchain Forum Helsinki.
Thanks. All right. Bye-bye.
All right. Take care.